Hello people, today we are going to learn about transaction recording process, the accounts and double entry. So let's get started. What is the account? An account is an individual account record of increases and decreases in a specific asset, liability or owner's equity. A company will have a separate accounts for such items such as cash, salaries, expense, accounts payable and so on. Debits and credits. The term debit and credit means left and right, respectively. The act of entering an amount on the left side of an account is called debiting the account, and making an entry on the right side is crediting the account. When the debit amounts exceed the credits, an account has a debit balance, whereas the reverse is true, the account has credit balance. So let's look at examples. The basic form of account. In its simplest form, an account consists of the title of the account, left side or debit side, right side or credit side, debit balance, credit balance. This is how it looks. So the alignment of these parts resembles the letter T. This is the T, and therefore the account form is also called T account. So this is T account, where there is a title of the account. On the left hand side there is a debit side, on the right hand side there is credit side, there is a debit balance and there is a credit balance. This is a tabular summary compared to account form. This is a tabular summary in which there is 15,000 cash, and then there is a credit of 7,000 cash, then again there is a debit of 1200, debit of 1500, credit of minus 600, credit of 900, credit of 200, 250. So in account form, this cash has a T account which has a debit on the left and credit on the right. So whenever there is a cash, incoming cash, which is always considered as a debit, which is 15,000. Whenever there is an outgoing cash, it is also considered as a credit, and it's on the right hand side. So similarly, in the normal case, the balance should be in this side. Whenever there is a balance on this side, that means it's a negative balance, which is not normal. Debiting an account. The owner, let's say an example, the owner makes an initial investment of 15,000 to start the business. Cash is debited to the owner's capital account, and owner's capital account is credited. So in this case, for any transaction, there should be two entries. So for this transaction, the investment of 15,000 should be on the asset side and on the cash T account. So we'll first make a T account with a cash, because it's an investment, it's incoming money, so it's on the left hand side, debit for 15,000, and mm, debit of 15,000, and we'll make another T account with owner's capital, which will have a credit of 15,000. Crediting an account. Monthly rent of 7,000 is paid. The cash is credited and rent expense is debited. So 7,000 is paid, which is outgoing money. It is an expense. So we have to put it on the credit side, or that is on the right hand side. So 7,000 on the right hand side on the T account is written like this. Debiting and crediting an account. Cash is debited for 15,000 and credited for 7,000, leaving the debit balance of 8,000. So looking at the previous two transactions, 15,000 was incoming and 7,000 was outgoing expense. So when we deduct 15,000 minus 7,000, the balance is 8,000, which is normal balance for any asset account. Double entry system. In a double entry system, equal debit and credits are made in the accounts for each transaction. Thus, the total debits will always equal the total credits, and the accounting equation will always stay in balance. Asset is equal to liabilities plus equity. Normal balance. Every account classification has a normal balance, whether it is a debit or a credit. So this is the illustration for asset and liabilities, In case of asset, debit increases, uh, any kind of income increase is always debited and any decrease is always credited. In case of liability, any increase is credited, any decrease is debited. And in case of asset, debit side is the normal balance. In case of liability, credit side is the normal balance. In case of owner's equity, credit side, that is right hand side, is the normal balance. In case of revenue, credit, this is very important. In case of revenue, credit side is normal balance, that is on the right hand side. And many times people confuse this with asset, but this is not an asset. Revenue is always normal on the credit side, and expense, there it should always be on the debit side. Normal is on the debit side. Retained earning, normal balance is on the credit side. For dividend, retained earning should be on the debit side. In normal case. Debit and credit rules and effect. This is the accounting equation: asset equal to liabilities plus owner's equity. Uh, Assets, in case of increase, it should always be on the debit side. In case of decrease, it is always on the credit side. Similarly, for the liabilities, debits decreases and credits increases. In case of owner's equity, debits decreases, credits increases. In case of drawings, owner's drawing, that means expense, debits increases and credit decreases. In case of revenue, debits decreases, credits increases. In case of expenses, debits debits increases and credits decreases. So by doing a few examples, you'll be able to get the idea. What is the trial balance? A trial balance is a list of accounts and their balance at a given time. The primary purpose of trial balance is to prove the mathematical equality of debits and credits after posting. Trial balance also uncovers errors in journalizing and posting. The procedure for preparing trial balance consists of listing the account title and their balances, totaling the debit and credit columns, and proving the equality of the two columns. Example of trial balance. A cash of 15,200, which is on the debit side. Advertising supplies is 200, is of value 2,500. Prepaid insurance has a value of 600, and office equipment has a value of 500. These are all asset. Then comes the liability, which has the balance on the credit side. So notes payable is $5,000. Accounts payable is 2,500. Unearned revenue is 1,200. Capital unearned. Look, the revenue is always on the credit side. We have to remember this. Capital is 10,000. Drawings is an expense and it is a $500 on the debit side. Service revenue is 10,000 on the credit side. Salary expense is 4,000 on the debit side, and rent expense is 900. So when we add the debit side and the credit side, both should balance. This is called the example. This is called trial balance. All the debits on all the T accounts and the credits on credit side on the T accounts should match. Limitation of trial balance. A trial balance does not prove that all the transactions have been recorded or that the ledger is correct. Numerous errors may exist even though the trial balance columns agree. The trial balance may balance even when a transaction is not journalized. A correct journal entry is not posted. A journal entry is posted twice. Incorrect accounts are used in journalizing or posting. Offsetting errors are made in recording the amount of transaction. So these are very important. We should remember all these when doing journal entries. Review of the recording process. Transaction document. Cash check paid or received, issued invoice issued or received, inventory received or shipped. Generates a journal entry. Any transaction document generates a journal entry which is then posted in the general ledger. And then this is general ledger is used to create unadjusted trial balance and is then adjusted for journal entries to create adjusted trial balance, and then which is the trial balance is used to create financial statement. So this is the process in normal accounting. So guys, I hope you got some idea about the trial balance and double entry. We'll do more examples and other topics on accounting in the upcoming videos. So subscribe to my channel. This is my channel, and come back next time for more topics. Thanks.